Hey guys, welcome back to another episode of Ryan Makes Sense. Today I want to talk to you about the psychology of market cycles, specifically the stock market. I've got a little picture showing you guys this popular chart. You've probably seen it before. It's kind of just a cycle of when the stock goes low to high, all-time highs or new highs in the cycle, and then comes back down and then stays down for much longer than we think, putting us through so many emotions, all the way from disbelief, hope, optimism, belief, thrill, euphoria, complacency, anxiety, denial, panic, capitulation, anger, depression, and then restarting at disbelief. So, the disbelief, I believe we are at the disbelief portion. That is basically a suckers rally, dead cat. It's not really a dead cat bounce, but it is, I want to say it is a bull trap. We've seen a lot of companies do really well recently, not going back to their all-time highs, but just doing well, doing okay. And we're starting to see crumblings of companies going back and retesting their lows prior to the large spike and coming back down to like the anger area. So we're at the top of the suckers rally, and I think we're going to go back to the anger area. And then once the stock market reverses again, we're not going to really believe it because we're in disbelief. It's like, oh, we're not going to purchase anymore because it's going to keep going down. That is the cycle of stock market psychology. You get a high and then you wait because you think your stock's going to go up and up and up, but it just falls and puts you in a state of anger, depression, and then disbelief. So without further ado, let's take a closer look at this chart. So here's a blown up version of the chart I was just talking about and showing up in the corner. So just to go through this chart really quick, we can see down here, this is the beginning of the market cycle run. So we're in disbelief. Nobody really thinks the rally is going to last. They think the price is going to continue to fall or go sideways. But we do see some hope. The stock price goes up, a recovery is possible, starts to make some moves upwards, starting to get some good gains. Now we're at optimism. The rally is real. This is exciting times. And then it's belief again. Now we got to really get into the market. This thing's really moving. We got to really kind of just get into this. Next is thrill. Like, oh my God, I want to buy more on margin. I want to put another mortgage on my house. I want to sell everything and buy stocks. And then euphoria. I'm a genius. We're all going to be rich. This is how I felt back in 2021 with Soul. I found this a couple times actually. Coming back down, now we're at complacency. Now we're starting to make excuses as to why the market's going down. We just need to cool off for the next rally. And then it gets anxiety, like, oh, why am I getting margin calls? Like, what's going on? Why am I starting to see deficits? Now we're in denial. My investments are with great companies. They'll come back up. Then panic, where everyone is selling. I need to get out of the market, take everything. And then capitulation, where it's literally like, I'm done with the stock market. I'm not even going to look at it, deleting the apps, deleting the brokerage, whatever. I'm done with stocks. I'm done with this stock I'm holding. And then you have anger, like, who shorted the market? Why did the government allow this to happen? And then it goes into a depression, like, my retirement money is lost. How can we pay for all this new stuff? I'm an idiot. And then we're back to disbelief, where we see like a suckers rally where the market's going up, but we're in disbelief. We know it's going to go back down. And that restarts the cycle back over here. So I currently believe we are in disbelief. I think we are heading for tougher times. We have rates going up, which is not good for banks. Banks are holding tons of losses that, we're starting to see banks collapse. We had 5 banks collapse so far. I believe 5. Signature, Silicon Valley. I think First National is getting into some hot water. As of this recording, we are watching Deutsche Bank and seeing how that goes. Their insurance premium to cover costs of crisis and all of the debt they have just ballooned. So, I mean, we're seeing that play out now. Who knows what's going to happen? Um, so, yeah, I think we're in for darker times. If we look at, uh, excuse me, if we look at George Trich's periods of when to make money, we can see down here. If you guys aren't familiar with this chart, let me make my head a little smaller. So this is the periods to make money chart. I'll introduce you. Over here is A. This is the years in which panics have occurred and will occur again. We have B, years of good times, high prices, and time to sell stocks and values of all kinds. And then C, years of hard times, low prices, and a good time to buy stocks, corner lots, goods, etc. And hold till the boom reaches the years of good times, and then unload, which is B. So we're currently here. This is us, 2023. The next boom is 2026. Okay. And I do, for those of you who are not familiar with this chart, we have the year 2007. From 2008 to 2012, that's when we had the great financial crisis. So 2007 down to 2012, this went from the boom period all the way back down to being a good area, good time to buy stocks and corner lots, which is real estate. So, yep, 2023 to 2026, it is going to be rocky. I think we're going to see the banks. We're going to see a lot of those smaller, medium banks kind of disappear as people are getting concerned and moving all their banks to the top banks like JP Morgan, Wells Fargo, Bank of America, the too big to fail banks, as they say. So, yeah, you know, I believe that is why we are here. I think we're in the disbelief stage, and I think we're going to be here for quite a while. You know, and then once again, once the market starts turning upwards again, nobody's going to believe it. It's going to be the false rally, the the bull trap number 2. So, yeah, here is the cycle of or psychology of the market cycles. I'll put this in the video link or in the description below so you can reference this as well. It is a great reference. There are so many stocks that have followed this trend. Hey guys, I know this is a weird transition, but I actually did want to show you some examples of some charts on stocks. Not necessarily the ETFs or the major indexes, and I'll show you exactly why as well, why I don't. The indexes don't necessarily follow the psychology of the stock market, but individual stocks do. I think Bitcoin does. And to further back that up, let me just show you. So I've got several stocks from several different sectors as examples, basically following the psychology of the stock market chart. So just for quick reference, this is what the psychology of the stock market chart looks like. You start at the bottom, you go to a very, very tall high, and then you get back to near the bottom, and it kind of just creates a new base, consolidation base, and then it kind of goes over here to the disbelief, and then it restarts the cycle over here of hope all the way up to euphoria. So let's look at why the indexes like the S&P 500, the Dow Jones, don't really follow the psychology of the stock market chart, but it follows the mentality. So here's the S&P 500 on the monthly chart. So look how this chart has been over, this only goes to 2011, but it goes all the way back to 1926, and the chart is the same. It literally just goes at right direction up and to the right towards that positive trajectory. If you look at my mouse, it's just going one way. And let me move my head. So you can see there's no real huge fall from grace. And they're like this S&P 500, the base of the S&P 500 goes all the way back 1,000? No, 100 years. Yeah, 100 years, not 1,000. So, I mean, there's been several bases over the years. I think the last good base that we had was probably 237. So we could see the S&P maybe go back to 237, but kind of sounds doubtful. But one thing I do want to call out, and I am excited to announce my revelation to you guys, and I think I'm going to make a wonderful video about it. The last time the S&P 500 touched the 200 SMA was at $110, and it ran up to 480. So that's a 1 to 300% return on the S&P 500 ever since it touched the 200 SMA. So just note that down. S&P 500 since touched 200 SMA, 300%. So note that part down. I'll let you know when to note things down. So the indexes don't really show you very well. Now, cryptocurrency, on the other hand, look at Bitcoin. You see this base right here, and my head is now in the way of this one. So we've got the base right here. We came up, we came down, we had a nice bounce. And if we look at the psychology of the stock market, here's the bounce that Bitcoin appears to have, and it might go back down below, following the anger, like, oh, I'm angry, the anger psychology emotion. Anger would probably come back down to the 10,000, 13,000 level. So just wanted to note that out. I feel like Bitcoin kind of follows the psychology of the stock market. The Bitcoin does really follow the stock market very well. It feels like it's also starting to decouple from banking, the banking stocks, banking system. So we could see a decoupling, and Bitcoin will probably stop acting like stocks if it does become a sought after currency. So now we're going to get back into individual stocks, and I'm going to get back to noting when the last time the stock touched 200 SMA. So another stock that looks like we are following the psychology of the stock market well is Digital Turbine. Got to move my head again. So we have our run up here, and the base is around $10. Euphoria all the way up here. We have a little spike right here, and we're going back down to the $9, $10 range. Again, I think we're probably at anger and maybe going towards or already in depression for Digital Turbine. I'll let you guys be the judge of that on how you perceive where we are in the stock market. I was in Digital Turbine at $1, and I had this forecasted going to 10 and beyond. But I'll have another video on that as well. So I purchased this around $1.10. I had 30,000 shares. The last time this touched the 200 SMA, the 200 SMA is not even showing on this chart. Let's see if it shows on the weekly chart, or I'm sorry, the daily. Of course it's showing on the daily. What about the weekly? Okay, so perfect. This feeds into my thoughts. So the last time the stock touched the 200 SMA was under $3, and it ran to $100. I feel really great about that one. Found that one at the beginning. So just noting that as well, because imagine if I could create a screener where we find the stock where the monthly stock price is at the 200 SMA, where momentum is kicking up. Killer. So so for S&P 500, we have about 300% return. Digital Turbine, I think that is a okay. So let's look at purchase price of $1.30, and it ran to $100. That is a 7,500% gain. Perfect. So S&P 500, 300%. Digital Turbine, 7,500%. Now let's look at Boeing. This is, again, these are all different sectors. We're going to go to monthly. It's already here. Okay. So can you tell where we're at in the stock market cycle? So we had the basing down here around 80. We had the euphoric high up to 445. And we came down here. This is the fake out. Now we're at anger, I think. Yep, I think we're at anger. Now it's going to go to depression. So I think it's going to dwindle down towards 100 over time. The last time Boeing touched the 200 SMA, this light yellow line, right here at 56 and it ran to 450. Let's just see, 56, 450. Almost a 1000% gain. That's 700% gain right there. Now let's look at target. This is going to be apparel. Can you see where we are on the chart? Again, we have our basing down here around 50, 60 area. We had euphoria go to 265. And now, can you guys identify this pattern? This is a really strong bear flag. So we have the flag pulled down, and then we have this rectangular skew, which is the flag. It should go back down to $100, $1,500. And the last time Target touched the 200 SMA was right here. $55 ran to 260. That's around 500% gain. 372% gain there. You guys see where I'm going with this? Imagine a screener that, again, looks at the 200 SMA on the monthly chart. Just saying. So we looked at target. Now we're going to look at Sunrun. Let me move my big old head. All right. We had the basing. We had euphoria. Kind of feels like we went down, anger, down, and we're heading towards depression time. So depression, when I say depression time, I mean depression emotion on the stock chart right here. Like we went down, we came up, and now it's just going to trade sideways until we build momentum on the longer term. Last time Sunrun touched the 200 SMA was, oh, they don't even have the 200 SMA here. What about the weekly? Oh gosh, it's back at 11. 11 up to 100. I mean, that's still a killer gain. A 100% gain. So you guys saw where I'm going with that. Again, the psychology of the stock market. I think we are near the disbelief, but after looking at a bunch of charts, I'm thinking we might be more towards the bull trap right here where it's going up and then it's going to go to depression to disbelief. I think Bitcoin might be at the disbelief part if it starts to decouple from the banking sector and really gets traction and regulation for currency. Good Lord, that would be amazing. I do own Bitcoin, but not anything life-changing. I own a bunch of SHIB, which could be life-changing down the road. I'm thinking 12 years from now, for sure. Definitely a long-term hold for me. So sorry about that. That was all I want to show you guys. Thank you so much for sticking with me. Please, if you made it this far, subscribe, like the video, leave a comment. Really helps me out. It makes me happy when I can influence and make someone happy. So thanks again. Hope you're doing well. Have a great night or day. Bye.